We are once again joined by financial expert Chuck Zodda from the Armstrong Advisory Group to discuss the stock market and some economy news. And Chuck, we'll start here. Hiring has slowed, unemployment is up, and many things cost more than they did a year ago. Is the economy weaker now than it was before President Trump took office?
I think it is, but I also think it was weakening prior to him coming into office as well. You can make a pretty clear case that over the course of 2024, Joe Biden's last year in office, the economy was weakening then as well. And so I think this has been a pretty consistent slowing that we've seen over the last couple of years now. And so the question's going to be, hey, does that slowing accelerate or continue to the point where we end up with the U.S. economy in a recession, or do we start to pull out of it maybe in the next few months as maybe some of the uncertainty around tariffs and other pieces of the economy start to resolve themselves? So we'll have to see how things go, but I think that's the state of play heading into the fourth quarter right now.
And despite all I stated before, the stock market continues to weather the storm. Why do you think investors still see green pastures out there? Is it mainly tech stocks that are driving the gains?
Well, I think there are two things. The first is, yes, it has been recently tech stocks that have kind of been driving things over the last 4 to 5 months, aside from a couple brief interruptions. But the other thing is that stocks tend to be forward looking. And so when you look out, 12, 18 months from now, you say, okay, a lot of the stuff that might be plaguing us now and being a drag on the economy now, maybe that stuff has resolved to the positive and you're starting to see a little bit more growth in places like housing, manufacturing, things along those lines. And if that's the case, then you have, a convincing case for why stocks could continue to move forward. So I think it's the combination of those two things. Number one, tech stocks kind of keeping things afloat in the short term here. But if you get out further, maybe some of the other problems start to have some solutions to them that make the economy look a little bit better as you get out deeper into 2026 and 27.
There's an anticipated Federal Reserve rate cut at a meeting next week. Do you see that happening, or is it just wishful thinking?
Well, the market certainly sees it happening. The Chicago Mercantile Exchange runs a tracker on this very topic, and they're basically saying it is a 100% chance of a Fed rate cut. The only question, will it be a 1/4% cut or a 0.5% cut? Most of the money is on it being a 1/4% cut, about a 90% probability of that as of this morning. But it seems to be, fairly certain that you're going to see a rate cut at that meeting, unless we get some kind of huge surprise to the upside on some inflation data tomorrow, which again would be a big surprise to everyone. So we'll see where things go. But right now, looking very, very close to certain that you're going to have a rate cut next week.
Let's go to the housing side of things. On the mortgage front, the rate of a 30-year fixed mortgage dropped to its lowest level in a year. Is this fueling more home purchasing?
So this rate drop only started in the last week or so, so it's too soon to tell, but we can look to this time last year to see what the market did in a similar situation. And what we saw wasn't necessarily more activity, but it was in fact just higher prices being paid for the same homes, just because with lower mortgage rates, you can afford to spend more on a house. So we'll have to see how this all mixes here. One of the things that we've been seeing the last few weeks, a lot of people pulling properties off the market because they have not been able to get the prices that they've wanted. And so that's resulted in inventory kind of plateauing and starting its year end rollover a little bit sooner than it normally does. And so maybe this is a case where, hey, does this entice some people to get those properties relisted? And if that's the case, what do we see now that we have additional inventory coming back onto the market? But it's a very fluid situation with housing right now.
All right, final thing for you, Chuck. This is a fun one. Are Pokemon cards a better investment than stocks? And the reason I ask that is a Wall Street Journal article shows the right cards have a 3,000% return since 2004. What do you make of this collectibles market?
So huge caveats. I've never held a single Pokemon card in my hand. I've never played a Pokemon game. I've never watched a TV show. So I am fully unqualified to speak in any depth on this, but remember, Pokemon cards, they're like any other collectible. They tend to go through periods where they might perform very well in the secondary market. They can go through periods where they perform poorly, and it is a highly illiquid market. You cannot just push a button to sell it. You do not get, a bid-ask spread showing up on your screen on a daily basis. So it is something where, hey, for whatever reason, people clearly are saying right now there's some value in it. Will there be any 5, 10, 25 years from now? I have absolutely no idea because unlike stocks, there's no cash flows, there's no underlying business, it doesn't spit anything out. It's purely will someone pay you more for that tomorrow than you bought it for today? And I just don't know.
Well, we'll start you on the original 150, Chuck, and then we can then we can go from there on the Pokemon front. Thanks so much for the time, Chuck Zodda from the Armstrong Advisory Group. Thanks for being with us again.
All right, thanks, Joe.